Assalamualaikum warahmatullahi wabarakatuh. My name is MUSFIRAH binti YUNUS. Metric number I191-03708. So based on the topic that I have choose is application of Murabahah contract in Islamic banking product. Murabahah application is allowed because of when Islam came and it improved the practice of Murabahah because it fulfills the needs of different types of people. This contract enables both parties to enter a partnership and to make profit. Most of the Islamic bank and financial institutions are using Murabahah as an Islamic mode of financing, and most of their financing operations are based on Murabahah application. Murabahah is a term of Islamic FIQH, and it refers a particular kind of sale having nothing to do with financing in its original sense. Basic ingredient of Murabahah is that the seller discloses the actual cost he has incurred in acquiring the commodity and then adds some profit thereon. And the last one, the payment in the case of Murabahah may be at the spot and maybe on a subsequent dates agreed upon by the parties. Next slide is definition of Murabahah. Literally, the words of Murabahah is derived from the Arabic, which is darabah, which is mean travelling for business. Second is technically, which is Murabahah is a type of partnership where one parties provide capitals and the other parties provide the labor and management skill. In this Murabahah, there are two type parties involved, which is capital provider and the manager. Next slide is nature of Murabahah. Murabahah contract is a type of a trust seller where the contract under the Sharia in which the purchaser relies upon the integrity of the seller acquired to desire Sharia compliant asset at a reasonable cost. Islamic financial institution, which is IFIS, perform both roles of a trader and a financier under the Murabahah contract. Murabahah also referred as a cost plus financing is an Islamic financial structure in which the seller and buyer agree to the cost and the markup of an asset. In Murabahah contract of sale, a client petition a bank to purchase an item on their behalf. And the last one, Murabahah is considered as a kind of trust sale because of the buyer trust on the seller in his disclosure and acquisition cost and profit. Otherwise, in a Murabahah contract for sale, the bank buys an asset and then sell back the asset to the client with a profit charge. Murabahah also refers to a sale and purchase of an asset where the acquisition cost and the markup are disclosed to the purchaser. Murabahah is a sale and purchase contract which is binding in the nature, and the last one is the Murabahah is the specific inherent nature of the contract Murabahah, which is the sale contract, which is based on the element of trust and in disclosing the cost and the markup cost. So next is component of Murabahah. This Murabahah contract can be divided by two categories, which is first classification of Murabahah is unstructured Murabahah, also known as Al-Murabahah Al-Mutlaqah. It is a form of Murabahah contract where the capital provider doesn't restrict the manager and give him a full freedom in terms of capital administration. In this case, the manager has no restriction in his business and type or location. He has a luxury to invest the money and do whatever he wants on his expertise and experience. The second category of Murabahah, which is restricted Murabahah, also known as Al-Murabahah Al-Muqayyadah. It is a form of Murabahah contract where the capital provider restricts the manager to a particular types of business or to a particular location. In this case, the manager has to work or to invest capital within the given boundaries. The capital has a right to put any condition which is he thinks appropriate, as long as that will not constrain the manager from his basic operation. Meanwhile, there are main components of Murabahah, which is include contracting parties, asset and the price. The first component of Murabahah is contracting parties, which is Murabahah contract that involve two parties, which is the purchaser and the seller. the legal capacity of a person is, from Sharia perspective, is defined as a capacity to assume rights and responsibilities. Legal capacity of a legal entity is defined as eligibility of an entity to acquire right and assume responsibility. The contracting parties in a Murabahah contract may be a natural person or a legal person. And the last one, the Murabahah contract shall be entered into through an offer and acceptance between the contracting parties, which is that involve the two parties. Okay, next component of Murabahah contract, which is asset. Asset that have to be traded in a Murabahah contract shall meet the following conditions, which the asset is recognized by the Sharia: valuable, identifiable, and deliverable. So the next condition, the asset is already existent and owned by the seller. The Murabahah asset may be tangible or an intangible asset. In this following asset shall not be traded under the Murabahah contract, which is asset to be constructed, or asset under construction, and the asset which is debt in nature. The ownership in the Murabahah asset must be effectively transferred from the seller to the purchaser. Okay, next is the ownership in Murabahah asset must be effectively transferred from the seller to the purchaser. Next, multiple Murabahah contracts shall not be entered into the simultaneously on the same asset. And the last one, the purchaser may choose to continue with the contract as is or with any mutual agreed variation of the terms of the contract. The last component of Murabahah contract, which is price. The price and the currency used shall be determined and mutuality agreed at the time of entering into a Murabahah contract. The price shall be based on the disclosed acquisition cost and the added markup at the times of entering into the contract. Any reference rate adopted to determine and the markup shall be specified. The cost of the service integral to an asset, such as installations cost, may be included in the cost portions of the acquired asset. And the last one, any asset acquired by the seller may be sold to the purchaser in any other agreed currency, provided that the seller discloses to the currency used in the acquiring to the asset. The next slide is legitimacy of Murabahah contract, which is have 4 sources. The first one is the Quran, from the Surah Al-Baqarah, verse 275, which is the meaning, whereas Allah Subhanahu wa Ta'ala has permitted trading and provident usury. And the second one, which is the Sunnah, from the narrated by the Hakim Al-Mustadrak, hadith number 2160. The meaning of the hadith is Prophet Muhammad SAW was reported to have said, the best earning is what a man earns with his own hands and from a permissible trade. Okay, for the third sources of legitimacy of Murabahah contract, which is ijma. The Muslim jurist has reached ijma on the permissibility of Murabahah contract. And the last one, the last sources is qiyas, which is since the Prophet Muhammad SAW approved the tawliyah sale, which is in the sale based on the cost price, the sale on the markup will be equally permissible on the basis of analogy on the tawliyah sales, and the determination of cost and making the cost known to the purchaser is common in both the tawliyah and Murabahah sales. Okay, next is application of Murabahah contract in Islamic banking product, which is have 5 categories. The first one is characteristics of Murabahah. Murabahah is the sale of goods at a cost plus and an agreed profit, which is the known as markup. Defects, if any, must be disclosed to the purchaser. The next one is the mode of payment in Murabahah transaction, which is the commodity must exist at the time of the contract and must be owned by the seller first, and at the time, whether via constructive, which is called hukmi, or physically possession, which is called fi'li. And the last one, quality and quantity must be defined in clear cut terms, and the exact date and method of delivery must be also specified to the purchaser. The third category is a key principle of Murabahah. It is a cost plus transaction. It is involve three parties, which is customer, bank and supplier. The relationship between the seller and the buyer is fundamentally built on the principle of trust. The overall price may be paid over at the end of the agreed period of time. The bank can ask the customer to post collateral or guarantee in order to mitigate the counterparty risk associated with this type of contract. The bank has to revert the customer the actual cost of the good and the markup. Yearly repayments by the customer are permissible can bring about the reduction of the overall price. And the last one, the bank can impose penalties on the late payment, provided that any received amounts be paid in charitable and philanthropic organization or fund. Next category, which is application of Murabahah contract, which is have 7 categories. Mortgage for financing home sales. Trade finance merchants can approach Islamic banks with the aim to obtaining financing. Next, major asset financing. Murabahah used to finance the purchaser of assets such as car and or appliance. Cash management is bank can employ Murabahah as cash management tool to request to purchase and sell goods. Next is working capital finance, which is a company may resort to Murabahah in order to finance its operation or expansions. The letter of credit is Islamic bank use Murabahah to open letter of credits. And the last one, syndicate loans, which is it provides a short-term facility to projects such as utilities and infrastructure developments. And the last category, which for application of Murabahah contract in Islamic banking product, which is defect disclosure in Murabahah. If any defect in underlying asset beyond the control of the parties to the Murabahah contract, and once of the two parties establish the existence of the defect, they may either to amend the terms of the contract by adjusting the price to account for the defect, or simply revoke the contract. Next is the last slide for application Murabahah in Islamic contract, which is the conclusion. The conclusion for Murabahah is not a loan given on interest. It is a sale of commodity for a different price, which is include an agreed profit and added to the cost. Murabahah cannot be used as a mode of financing, except where the clients need funds to actually purchase some commodities. Next is no Murabahah can be affected for the overhead expenses, paying the bills, or settling the debts to the client. Nor can it be affected to the purchaser or of currencies without having it ownership or assuming the risk of the commodity. True, for a short while, the transaction is not acceptable to the Sharia, and the profit occurring therefrom is not halal.